SCHD, the best dividend ETF on the market? I don't know. That's what I want to talk about because for years, and I've done videos in the past, I think actually 2 years ago, I did a video with the best ETF, dividend paying ETF, and I compared like 10 or so. And it pretty much came down to VYM and SCHD at that point, even 2 years ago. And there were so many people that were like, no, SCHD is the best. It's better than Dividend. It's better than VYM. You're a Vanguard fanboy. You have your red Vanguard shirt on. So now with more people, I just recently did a poll because I was curious if the hype for SCHD is still as big as it was even 2 years ago. And it was. I mean, most people came through with SCHD or VYM as the best dividend paying ETF there is. Now, I know there's some of those young guns out there that like to trade on a 2-week time frame that think that QYLD and all these covered call ETFs and they're out there searching for dividend yields. That's fine. That's fine. I know you're going to be in the comments telling me once again why QYLD is the best, or maybe even JEPI. I do need to do a video on JEPI because after the QYLD video, people are like, give JEPI its fair shake. So I will be doing a JEPI video. That's going to be coming up. But even if JEPI is better than QYLD, and by better, I mean just not complete garbage sinking ship, the worst investment I think you can make right now, even if JEPI is that good, it's still not going to be better than SCHD or VYM. So after doing some research, I do want to kind of change my opinion on SCHD and give a reason why I might actually consider adding it to my portfolio moving forward. I haven't done it yet, full disclosure, but I'll give you the reasons why I might do it moving forward. Now, before we get into my opinions on SCHD versus VYM, let's first just look at the general basic facts of the two ETFs. Guys, this is right from Charles Schwab's website. SCHD, it is an ETF. It tries to track the total return of the Dow Jones US Dividend Index, 100 Index. Expense ratios between VYM and SCHD pretty much, I think they're virtually identical. We'll see if we go over to VYM, what is their expense ratio? Their expense ratio is the same, 0.6%. If you don't know what that means for every $10,000 invested, you are going to owe Vanguard or Charles Schwab $6, okay? $6 for every 10,000. Usually with ETFs that are passively managed, we're not going to want anything that's over like even 0.1. I think at this point in the game, 0.6 is about as high as I can go. Once we go above 0.6, I think you can kind of do the job yourself. It has all the highlights. The highlights are going to be the same. The one thing I will mention, and these were some of the reasons why I did not really believe that SCHD was better than VYM, is mostly like track history. All right, we know that VYM has been around a lot longer than SCHD. The turnover rate, which means the amount of companies that are coming in and out of the fund. Right now, I think Vanguard's is about 7% turnover with VYM, where SCHD is almost double that. Assets under management, which isn't really a big deal. I kind of got roasted in the last video about that not really being a big deal. Yes, Vanguard is just going to be bigger when it comes to ETFs, so their assets under management are a little bit higher, but that's not really that big of a deal. So if we look at the other like fund characteristics and profile things, guys, stuff that you can look up, but I will give my opinion on why I think some of these matters. Once again, 2011, it still has a pretty good track record, but it really hasn't done a downturn. It hasn't done like a little recession like we are going into right now where VYM kind of did. So we'll see how that exactly happens. Total holdings. Here's like a big one why I still think VYM is a little bit better than SCHD. 104 holdings is a lot less than Vanguard has. Let's go over to VYM and just see their amount of holdings. I think it's in the 400 area. Yeah, we can see right here, they have 443. Now, why is that important to me? That's important to me just really for diversification, right? Do we want to be dealing with 100 companies and we have to depend on those 100? Or do we want to be depending on 400? Some would say 100 is enough. Like once you get over 100, like the total difference doesn't really matter. That's really up for you to decide. But for me, the same reason that I like VTI, the total stock market index, versus something like the S&P 500 and VOO, I like to have 4,200 companies that are going to be affecting the ETF more than I like 500. Now we'll see that the holdings, the top 10 holdings for both are about a quarter of the whole fund. But still, I personally like VYM, and I think it gives it a little bit of an edge over SCHD because it has 4 times the amount of holdings, which gives it 4 times as much diversification, in my opinion. Here's that turnover rate that we were talking about, 14.49. The dividend yields right now as of 8/18, so pretty recently, 3.18 on the 30-day dividend yield, which is pretty good, okay? 3.1 for SCHD. If we go over to Vanguard, we see that their 30-day yield is 2.89 as of 7/31, so about 2 weeks difference. So there is a little bit of a difference there. Now, guys, I am not a dividend yield kind of chasing guy, but this really, to me, gives a little bit of an edge to SCHD, but the difference between 3.1 and 2.89, okay, there is a difference there, but not enough really for me to swing either way. I think it's very, very clear as we go on through this video, guys, they're both amazing, okay? And there is one reason why I'm going to consider buying SCHD and not purchasing VYM. Right now, I don't own either of them in any of my portfolios, but in my dividend portfolio, I've wanted to add an ETF. I will tell you why SCHD is going to be the one that I'm probably going to put in there, not VYM, even though I think, my opinion, that VYM is a better return. So hold on, I'll tell you about that in just a second. For the performance side, guys, I'm going to go over to Stock Rover. It's just what I use to compare. It's how I look at all my technicals. I'll leave a link for it if you want to try it out. It really is awesome. I have the Premium Plus. You can see I pay for it. That's how good it is. But if you want to track stuff, I have Stock Rover videos. You can go back. But first, let's look at the dividend adjusted return. This pretty much means that if you were to drip your dividends back in and keep purchasing shares, where you'd go. And VYM is going to be in blue and SCHD is in green. And VYM goes back further, but I pretty much put this chart where SCHD started. And we can see for most of their careers, they pretty much tracked exactly the same. If anything, VYM was pretty much higher for most of the case. Now, right here, this dip right here, this is COVID. They both dipped together. Now, after COVID, we have seen that there has been pretty much a tear for SCHD, which is why I really believe that its popularity has been overcoming VYM's popularity. People are always looking for something new. People want to hate on Vanguard. I think this is a major reason why, but that's okay. And there is a reason why it tore out. And I think the sectors and the holdings that we're going to look at in 1 second, that is the reason for this. But I believe that this tear right here that we're on, I think could also be its downfall if we continue to pull back in the markets like we have in 2022. But I am not going to try and make you believe or try and sweep under the rug the fact that SCHD, since its inception with dividend adjusted returns, 320% return, and VYM's during that same exact time is only 260. I'm not going to pretend like that is not, like, that's a 60% difference. So that really is, if you got in on day one of SCHD, I am not going to try and say that SCHD wasn't a better ride for you than VYM was. If we look at just the price return, okay, see if there's anything different. Meaning, if you didn't drip, if you just bought it and held it for appreciation, we see kind of the same exact chart. And this time, SCHD up 200% and VYM up 156. So purely from a growth standpoint, yes, SCHD has been much, much better. But since 2011, from 2011 to 2020, pretty much 9 years, they were virtually identical. It's only been this short term from 2020 to now where we've seen any separation in both the price change and as well as the dividend adjusted return. So you need to ask yourself, is this going to continue? Will they level out? Are these really just the same exact thing and you're going to get the same benefits? Or is SCHD going to continue to grow? Let's look at the holdings and really talk about, once again, why I think I'm going to be going with SCHD in my dividend portfolio. All right, so this is SCHD. Top 10 holdings: Pepsi, Cisco, Home Depot, Texas Instruments, Cola, Merrick, Amgen, International Business Machines, IBM, Broadcom, and Pfizer. Here's really the thing that has pushed me away from it in the past. Guys, it's sector, all right, it's sector diversification, 20.78 into information technology. Guys, as technology was on a bull run, I think that was the major reason for the difference in growth. 20.78 in information technology and financials. So we have almost 40% of this fund is based in information and financials. That is not the case with VYM. VYM really focuses on financials, which is almost 20%, and their second biggest is healthcare and consumer staples. So we see that they're heavy at the top with 1, 2, 3, 4, only 4 sectors having over 10%, where financials is the really big one. If we get down to technology, it's very, very low. So if you fear that tech is very overweighted like I have in the past, you are going to want to go with VYM, all right? They are more focused on financials and things like that. But here's something that I didn't really notice 2 years ago. This is 1, 2, 3, 4 different sectors over 10%. It looks like they spread themselves out a little better in SCHD. Even though they're tech heavy, they have 1, 2, 3, 4, 5 different sectors that are over 10%. So some would say that that's going to diversify them even better. And that is something that I do like about them, even though I think that that 20% is a little bit high for my liking when it comes to tech. But it's the holdings why I really want to buy them. Because if we compare the holdings, here's the ones from SCHD, and here are the holdings for VYM: Johnson & Johnson, ExxonMobil, JP Morgan, Procter & Gamble, Chevron, Home Depot, Pfizer, Eli Lilly, AbbVie, and Coca-Cola. So if we see, I have them marked down here, they cross-cut among Home Depot, Pfizer, and Coca-Cola. So out of the top 10, they split 3. So if you own one, you're going to own the other. But in my current dividend portfolio, I own Johnson & Johnson, JP Morgan Chase, Procter & Gamble, AbbVie, and Pepsi. So if we look at VYM's holdings, if I were to purchase VYM, I'd be replicating Johnson & Johnson, JP Morgan, Procter & Gamble, and AbbVie. And with the crossovers, I'm really only exposing myself to really 3 new companies: the Eli Lilly, the Chevron, and the Exxon. And I've stayed away from those gas and things like that, and the oil sector. I stayed away from that. So by buying VYM, I'm really just replicating what I have inside the portfolio already. But with SCHD, I'll get exposure to Cisco, Texas Instruments, Merrick, Amgen, IBM, Broadcom. It gives me 6 new stocks that I can put into the portfolio, with also the ones I already have: Home Depot, Pfizer, and Coca-Cola. By buying SCHD, I'm really adding almost 10 new companies. I got the 3 that I own, 6 more. It seems like a good play, and essentially I can eliminate Pepsi, Home Depot, Coca-Cola, and Pfizer as individual stocks in my portfolio, add SCHD, and have a pretty good dividend yield that's over my current portfolio's dividend yield, and I can get a little bit of that growth from the technology while I'm still younger and still in kind of the growth phase of my wealth building, right? I'm not so focused on income, more focused on growth. If my best friend came up to me today and was like, "Brad, what's a better dividend paying ETF, VYM or SCHD?" Just like I do not say that VTI is better than VOO, it's really personal preference. I think we're at a personal preference here. My personal preference, I still, because of the holdings, because of the track record, because the dividend yield really isn't that much different for me, and because I'm growing in other ways, so I don't really care that much about the growth difference of the two, even though SCHD's is significantly more. I think overall right now, that VYM is a better dividend paying ETF for the long term, looking out 20 years, looking out 30 years. But just like my specific example here with my current dividend portfolio, the access to different holdings and a little bit of growth, for me, I think even though VYM is better for the long term, I have some individual stocks that I can outweigh that and kind of diversify away from VYM, that I think I'm going to be adding SCHD into the portfolio. My next dividend portfolio video, you'll see. I'll let you know if I add it. Consider subscribing if you want to see that and other content just like this, guys. SCHD, second best dividend ETF in the world. Second best. VYM still number 1. Have a good day, guys.